Before we get started, if you want to see more videos like this, hit that subscribe button and like this video. Welcome back. It's great to be wrapping up our exploration of private placement memorandums.
It's been quite a journey. We've covered everything from the fundamental elements of a PPM to the importance of transparency, due diligence, and building a strong team.
And now I'm excited to dive into some advanced strategies for crafting a PPM that truly stands out from the crowd and captivates investors.
Absolutely. We've laid that foundation. But now it's time to elevate your PPM.
Yeah.
From a simple informational document to a persuasive masterpiece.
Okay, so how do we achieve that? What are some key strategies to keep in mind as we're writing our PPM?
First and foremost, you have to remember your PPM is a story. It's the story of your company or your vision, your potential. Think about how you can craft that narrative that engages investors, draws them in, and makes them want to be a part of your journey.
So it's not just about presenting the facts and figures. It's about weaving those elements into a compelling narrative that resonates with investors on an emotional level.
Exactly. Facts and figures are important.
Yeah.
But they need to be presented within a framework that captures the imagination and inspires belief.
It's about creating a story that investors can see themselves in, a story that makes them excited about the possibilities.
Precisely. And that starts with understanding your audience.
Right.
Who are you trying to reach with your PPM? What are their motivations? What are their investment philosophies, risk tolerance? Tailor your message to resonate with their specific needs and interests.
So it's like crafting a custom-tailored suit. You wouldn't wear the same outfit to a board meeting at a beach party, right? The same principle applies to your PPM.
I love that analogy.
Yeah.
It's all about understanding your audience and dressing your message appropriately.
Okay, so we've got our story. We understand our audience. What's next?
Clarity and conciseness are paramount. Avoid jargon, any kind of technical terms that might just confuse potential investors. Remember, you're trying to educate and persuade, not overwhelm.
So it's about striking that balance between providing enough detail to inform investors without bogging them down with those technical complexities.
Exactly. Think about it like a conversation. You want to engage your audience, not lecture them.
It's about making the information accessible and digestible.
Precisely. And that means using strong visuals, charts, graphs, even infographics to break up the text and make the information easier to process.
A picture's worth 1,000 words, right?
Eh.
Especially when it comes to complex financial data.
Absolutely. Visuals can make your PPM so much more engaging and memorable.
And remember, your PPM is a reflection of your company.
Right.
It should be professionally designed, well-organized, error-free.
Attention to detail matters. A polished and well-presented PPM demonstrates professionalism and, instills confidence in those potential investors.
It's about making a great first impression and setting the stage for a successful fundraising journey.
Precisely. Now let's talk about some specific strategies for enhancing each section of your PPM.
Okay, let's dive in.
In the executive summary, you want to capture that investor's attention right from the start. Start with a strong hook, a statement that grabs their attention and makes them want to learn more.
So it's like the opening line of a novel, something that sets the tone and draws the reader in.
Exactly. And then quickly highlight the key elements of your business, the problem you're solving, your solution, your target market, your competitive advantage, and your team's expertise.
It's about painting a vivid picture of the opportunity in a concise and compelling way.
Precisely. And don't forget to quantify your potential.
Right.
Include some key metrics or projections that demonstrate that scale of the opportunity and that potential return on investment.
Give them a glimpse of the future and the potential for success.
Now let's move on to the offering terms. This section needs to be crystal clear and easy to understand. State the amount of capital you're seeking, the type of securities you're offering, the price per security, and any other relevant details.
So it's about laying out the nuts and bolts of the investment opportunity in a straightforward and transparent way.
Exactly. And remember, investors appreciate simplicity. Avoid using complex legal jargon or unnecessarily convoluted language.
Keep it clear, concise, easy to digest.
Now, in the company and management section, you want to showcase the strength and experience of your team. Go beyond those simple biographies.
Right.
Highlight your team's accomplishments, their passion for the business, and their unique qualifications to lead that company to success.
So it's about telling the story of your team and why they're the right people to bet on.
Exactly. And don't forget to include a clear organizational chart that outlines the structure of your team and those reporting relationships within the company.
This provides investors with a visual representation of your team's structure and hierarchy.
Moving on to the use of proceeds. This section is all about demonstrating that strategic and well-thought-out plan for how you will utilize the capital you raise.
It's about showing investors that their money will be put to work to fuel growth and create value.
Exactly. Be specific and transparent about how the funds will be allocated.
Ah,
Will you invest in product development, marketing and sales, expansion into new markets, or strategic acquisitions? Outline your priorities and the anticipated impact of each investment.
so we're providing investors with a roadmap for how their investment will be used to achieve specific milestones.
Precisely. And don't be afraid to include some financial projections or modeling that demonstrates that potential return on investment for each initiative.
Give them a glimpse of the future and the potential for success.
Now, let's dive into the business section. This is where you paint that vivid picture of your company's operations, its target market, its competitive landscape, and its growth strategy.
It's about providing investors with a comprehensive understanding of what the company does, who it serves, and where it's headed.
Exactly. Start by describing your products or services in detail. Highlight those key features, benefits, and competitive advantages.
So we're showcasing what makes our products or services unique and desirable in the market.
Precisely. And then define your target market. Explain who your ideal customers are, their needs, and how you're reaching them.
So we're painting a picture of our customer and the value proposition we're offering.
Exactly. And don't forget to analyze your competitive landscape. Identify your key competitors, their strengths and weaknesses, and how you differentiate yourself in the market.
This is where we showcase our understanding of the market and our ability to position our company for success.
Now, when discussing your growth strategy, be specific about your plans for expanding your market share and achieving scale.
It's about demonstrating that we have a clear and actionable plan for growth.
Precisely. Discuss your plans for product development, geographic expansion, strategic partnerships, or even acquisitions.
So we're painting a picture of the future and the path to success.
Exactly. And remember, investors are looking for companies with a strong track record of execution and a clear vision for the future.
So it's important to back up our claims with data and evidence whenever possible.
Absolutely. Now, when discussing the financial information, remember, transparency is key. Provide a complete and accurate picture of your company's financial health.
This is where we show investors the numbers and demonstrate our financial stability and potential.
Exactly. Include your historical financial statements, your projections for the future, and any relevant metrics that demonstrate your company's financial performance.
And remember, honesty and accuracy are paramount. Investors can spot inflated projections a mile away.
It's about building trust through transparency and a data-driven approach.
Okay, so we've covered the executive summary, the offering terms, the company and management, the use of proceeds, the business, and the financial information. We've painted a comprehensive picture of the company, its opportunities, and its financial health. What's left to cover?
Now we need to address the elephant in the room. No investment is without risk, and it's crucial to be upfront about those potential challenges your business might face. That's where the risk factors section comes in.
This is where things can get a little scary. Investors are looking for reasons to say yes, but this section is all about highlighting the potential reasons they might say no.
You're right, it can feel a bit counterintuitive.
Yeah.
But remember, transparency builds trust. Investors appreciate honesty, and they're more likely to trust a company that openly acknowledges those potential risks than one that tries to sweep them under the rug.
It's about managing expectations and demonstrating that you've thought through those potential downsides as well as the upsides.
Exactly. So what are some of the common risk factors that companies might include in their PPM?
That's a great question. I'm sure it varies depending on the industry and the specific business model.
You're absolutely right. Risk factors are highly specific to each company and its circumstances. But some common categories include competition, market fluctuations, regulatory changes, technological disruptions, reliance on key personnel, and even potential global events like pandemics or economic downturns.
So we need to tailor the risk factors section to reflect the unique challenges our business might face.
Exactly. A tech startup might highlight the risk of rapid technological obsolescence, while a retail company might focus on the risk of changing consumer preferences or supply chain disruptions.
And it's not just about listing the risks. It's about explaining how you're mitigating those risks.
You've got it. For each risk factor you identify, you should outline the steps you're taking to minimize its potential impact. This demonstrates a proactive approach to risk management and gives investors confidence that you're prepared for potential challenges.
So it's about turning a potential weakness into a strength. It's about showcasing your ability to navigate uncertainty and emerge stronger.
Precisely. That risk factors section isn't about scaring investors away. It's about demonstrating a realistic and comprehensive understanding of your business and those challenges you might face.
It's about building trust through transparency and showcasing your ability to manage and mitigate risk. Okay, so we've covered the risk factors. What comes next?
Next, we move on to the subscription procedures. This section outlines those practical steps involved in investing in your company.
So this is the how-to guide for investors who are ready to take the plunge.
Exactly. You'll explain how to subscribe for securities, the minimum investment amount, the payment methods accepted, and the closing date of the offering.
It's about making that investment process as smooth and straightforward as possible.
Precisely. You want to remove any barriers to entry and make it easy for investors to say yes.
This is where clarity and simplicity are paramount. Okay, so we've outlined the subscription procedures. What comes next?
The final section of the PPM is the exhibits. This is where you include all of that supporting documentation that backs up the information presented throughout the PPM.
So this is where we provide the evidence to support our claims. It's all about transparency and due diligence, right?
Exactly. Those exhibits might include your company's articles of incorporation, bylaws, financial statements, intellectual property agreements, any other relevant legal or financial documents.
It's about providing investors with access to all the information they need to make an informed decision.
Precisely. A well-structured PPM, complete with those comprehensive exhibits, demonstrates a commitment to transparency and instills confidence in those potential investors.
This has been incredibly insightful. Thanks for walking us through each section of the PPM and highlighting those key elements that make each section compelling and persuasive. It's clear that crafting a PPM is a meticulous process that requires careful planning, strategic thinking, and a deep understanding of your business and the investment landscape.
You're absolutely right. It's not a task to be taken lightly. But with the right approach and the right team, a PPM can be a powerful tool for attracting investors and achieving your fundraising goals.
It's the foundation for a successful fundraising journey. And speaking of building a solid foundation for your business, let's not forget about the power of business credit. It can be a game changer, providing access to flexible financing options and 0% interest credit cards.
Absolutely. Business credit is an invaluable tool, especially for covering those essential expenses like down payments and payroll.
Exactly. It can give you the financial freedom to scale your business without diluting your equity. If you're ready to unlock the power of business credit, I highly recommend checking out fixflipcredit.com. It's the best business credit mastery program online.
It's a fantastic resource for any entrepreneur looking to build a solid financial foundation.
All right, that wraps up our exploration of private placement memorandums and the art of raising capital. Remember, with the right knowledge, the right strategy, and a lot of hard work, you can turn your entrepreneurial dreams into reality.
I couldn't agree more. It's been a pleasure sharing these insights with you.
Until next time, keep those entrepreneurial spirits high, and may your fundraising journey be filled with success. If you found this information helpful, hit that subscribe button and like this video.